All right, I think I'm going. Anyway, this is Q4 2022 Paychex earnings summary. They beat on both revenue and profit. The stock did drop more than 5% the day leading up to the earnings call, and I think that is because people were anticipating poor results. And a lot of that has to do with the headlines, something that got talked about quite a bit in the call from other analysts was what are their future expectations. And so what the CEO talked about was, well, basically our expectations are going to be based on kind of what happens. We don't know. No one knows. There's a lot of talk about, recession. As of right now, they don't see a recession. Paychex doesn't anyway. Employment numbers are up. The wages are increasing. Clock times are increasing. And we're almost at full employment, which does create inflation, right? Because more people have more money. Therefore, things are more expensive because people have the money to pay for more things or for more expensive things. And so that's the way Paychex sees it. Of course, this information is lagging. It is as of the end of May 2022. So we'll see what happens when we get into August and September of this year. There have been headlines, a lot of headlines concerning some layoffs, but we're not seeing widespread layoffs as of yet. And whether or not that happens, Paychex says they don't know. I really love following this company because, they do human resources, they do paychecks, they do hiring. And so if you want to know where the economy is, where employment is, paychecks are the people that you want to ask about those things. They mentioned having to hire more people because of having more business. However, again, because of the headlines, the CEO says, you know what, we may have to adjust that. We may have to maybe not necessarily lay people off, but bring less people on in the future, depending on what things look like. At this point, it seems like everyone is just on edge and not sure exactly what's happening. The CEO was asked about how inflation is affecting the company, and the CEO said, other than a bit of more money having to be spent on labor, because of course it's a tight labor market, so you're having to pay people more money to work for you. Other than that, they don't have any real costs that are going to increase because what they do is primarily all done online. Um, the other thing that I thought was really interesting is during the call, the CEO was asked, again, what your future outlook is for the company and whatnot. And I've been accused of doing this too, which is having a worst case scenario approach to things in life. And that worst case scenario approach suits me well, but some people are freaked out by it. And so the CEO said that if we do encounter a recession, the company will be okay because back when COVID hit, our stock price dropped to $48 and we were still okay as a company. And I think him saying that really rattled a lot of people. There were some articles written about it. And so all of a sudden now you have people thinking, well, this is $100 stock. And you're telling me that if we do see a recession, that the stock price can fall to 50? Like that doesn't sound good, right? That's not something that you want to have, that you want to hear coming from your leader. I mean, if you're investing in this company, you don't want to hear him say, "Oh yeah, we might fall to 50, but we'll be fine," right? So I thought that was funny because I understand from his perspective what he's saying, which is if we do hit a recession, we'll be fine as a company. Like we'll be good. Yeah, the stock price may go down to 50, but so what, right? I mean, it'll be back up because nothing stays down forever. Um, and again, that's because this company deals primarily with employment. So if we do have a recession, we have widespread layoffs, then all of a sudden, a lot of their revenue goes down because there aren't the employees that's being hired. There aren't the employees that's getting paychecks, right? You don't have the smaller and mid-sized companies hiring or growing rather, and now needing a paychecks where they were doing payroll by themselves. But either way, decent quarter, still growing the company, as you can see here. in this slide. One thing that I did want to look at, though, that I thought was interesting is so when you're dealing with payroll, companies send the money to Paychex first, right? Where for Social Security, for FICA, for Medicare, for retirement benefits, for insurance, all those things. The company simply sends the money through Paychex, and then Paychex then sends their money through the IRS to the state to whoever they need to send the money to. But Paychex doesn't do that immediately. Typically, those things get paid out once a quarter, sometimes once a year, sometimes once a month, just depending on how large the employer is. And so Paychex holds on to that cash, and what they do is like any prudent money manager, they make money with that money, right? And so we see here average rate of return earned funds held for clients is about 1%, 1.5%, which is what you'd expect because remember, they aren't going to be investing this money in risky assets. Typically, they'll invest it in fixed investments that's going to pay at least an inflation rate return on the money, something like a bond or a treasury yield bond or something like that, right? What I thought was interesting though, and this is obviously a slip up by management, and this did not get discussed during the earnings call, but I really want to know kind of what happened here, right? They had a loss on funds held for clients. So imagine that, right? So I'm an employer, right? And so I am paying Social Security and Medicare for my employees. I send that cash to Paychex with the understanding that they're going to then forward that cash on to the IRS, right? Now, if Paychex loses my money that I paid to them to pay to the IRS, the responsibility is still on me to have those employer taxes paid. I can't so much fault Paychex for not paying it on time, right? Now, I can make that case, of course, but at the end of the day, I'm the employer. I'm the one that's responsible for getting the Social Security, the Medicare, the taxes, and all that kind of stuff paid, right? So I want to know what happened that they actually had a loss here because there should never be a loss. And I don't like using that word should, but like how? You know what I mean? How did you lose money on this deal? Because all you had to do was hold the money in the bank. You didn't have to invest it. You didn't have to do anything with it. You could have just held it and then paid it to the people and been done with it. But instead, like I said, any prudent money manager is going to invest that money and try to make some money back on it. So I expect there to always be a gain on this because it's so easy to invest in a risk-free asset that carries zero risk at all. You know exactly how much money you're going to be making. You know exactly when you're going to get it. There isn't any issues. So that is something that bothers me a little bit, especially because we've seen in other earnings calls, in other financials, that companies are in 2022 losing money in the market. We all understand that. We all know, what's happening. The market is down 20%. But I can't imagine a company like Paychex that's simply holding money for their clients, investing in any sort of equities or investing in any sort of stock market derivatives. That seems silly to me. So again, just something that I think is worth keeping an eye on. Now, this is a very small percentage of their income anyway, but still, though, it's something that worries me because if they are investing this into risky assets, well, what are those risky assets? Because if Paychex runs into a situation where they lose a lot of money for some reason, remember the R word, right? And they aren't able to make those payments, then they're going to be sued. And that's kind of an open and shut case at that point. They'll owe a lot of money, plus penalties, plus interest to all of their customers, and probably some regulatory agencies too, because as a PEO, as a registered agent that is holding funds for taxes, you have a responsibility. And so anyway, that's it. Other than that, very straightforward quarter. Again, the stock price did fall more than 5% leading up to the earnings release. I'm assuming because people expected there to be bad news coming from the company. All we heard was good news. Um, when September gets here, we'll see what happens there. But based on the fact that they beat expectations on both profit and revenue, I imagine that this stock price is going to see some uptick, at least back to where they were before the earnings